Coming up on today's program, Nigeria's first quarter GDP grows by 1.87% year-on-year. AngloGold Ashanti shuts South African mine after finding 164 coronavirus cases. And South African public sector wage dispute moves to arbitration. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. We begin here in Nigeria as the country's gross domestic product grew by 1.87% year-on-year. The performance recorded in first quarter 2020 represents a drop of 0.23% points compared to first quarter 2019 and 0.68% points compared to fourth quarter of 2019. This performance was recorded against the backdrop of significant global disruptions resulting from the COVID-19 public health crisis, a sharp fall in oil prices, and restricted international trade. Quarter-on-quarter, real GDP growth was minus 14.27% compared to 5.59% recorded in the preceding quarter. The oil sector recorded a real growth rate of 5.06% year-on-year in first quarter. The oil sector contributed 9.50% to aggregate real GDP in the first quarter. And the non-oil sector grew by 1.55% in real terms during the reference quarter. The non-oil sector also contributed 90.50% to the nation's GDP in the first quarter of 2020. That's less than its share in the first quarter of 2019. Well, we'll talk more on this later on the show. All right, let's get some intraday market numbers. And here on the African continent, South Africa's JSE index is actually trading and shedding 0.31% at intraday. Other markets remain closed for the Eid holiday, but Nigeria's index closed positive by 1.80% on Friday, while Egypt's market closed negative on Thursday. And markets in the Gulf region are also closed for the Eid holiday, but closed the week mostly positive on Thursday. Dubai's index was up 0.28% as Emirates MPD Bank gained 0.6%, while Dubai Financial Market rose 2.7% after its quarterly profits jumped 23.5%. On the flip side, Abu Dhabi's index was the sole loser by 0.43%. Elsewhere in the region, the Qatari index rose 0.19%, while Saudi Arabia's index was flat at 0.01%. And European equities traded higher in early trade as countries move forward with gradual plans to reopen their economies and lift coronavirus lockdown restrictions. Markets in the UK is closed for the UK Spring Bank holiday. But let's hear from my colleague Ulrich Bart, standing right on the Frankfurt Stock Exchange. Hello, Ulrich. Good to see you. Well, there is a crisis brewing over Hong Kong with possible worldwide consequences, yet the reaction in Asian markets was relatively muted. How is that reflecting in European markets today?
That's reflecting exactly that way here as well. In fact, the European markets are much improved over what happened in Asia. The markets that are open, you just said London was closed, yes, but Milan and Paris and Frankfurt are open, for example, and all are gaining, and Frankfurt is gaining more than all of the others, almost 2.5%. As we speak, you can see the curve behind me on the big board, the DAX making point for point. And just going strongly, more strongly, the longer the session has been lasting. And also Paris and Milan gaining some shares in Frankfurt actually gaining spectacularly. The investors seem to be pricing in not a worst case scenario in that potentially dangerous conflict over Hong Kong. Rather, they're pricing in a best case scenario. One analyst I talked to today said that he's not expecting the conflict to escalate. Neither side can afford that. Hong Kong can't afford that, really. China can't, and the USA can't either. Donald Trump, the US president, will be looking for the most favorable economic conditions running up to the election in November, and that doesn't include trade tensions with China. The market, of course, also being fueled over those improvements in the corona lockdown situation that you mentioned.
Now, an important court ruling in Germany's highest court today on the diesel scandal. What did the Federal Court of Justice rule in the case of compensation for VW diesel buyers, and what does it mean for Volkswagen?
a landmark ruling. The highest civil court in the land decided that Volkswagen is responsible for compensation to German buyers of defective diesel cars. It used very strong language indeed. The court, in talking about Volkswagen's actions, spoke of indecent, unethical rather, action. It deceived customers intentionally, and that's not the kind of language that one would want to be seen applied to someone that you would want to do business with. Still, with this harsh ruling from the court vis-a-vis Volkswagen, the Volkswagen share was down only slightly in early trading, and now it's basically flat. Other car shares also losing just a tad. But this, of course, also in contrast to the general state of the market where shares are in much better shape. So the car shares are feeling this. And Volkswagen is also likely to feel this financially. More damage so far. It's had about $30 billion in payout worldwide in fines and reimbursements. And this is likely to add because the court says Volkswagen is responsible for reimbursement minus the cost of the use by the customer for having sold people diesel cars that were not what they wanted and were not what Volkswagen advertised.
And reports on a possible court settlement soon for tens of thousands of court cases against the German Bayer Group helped the share today. Now, what is in store for Bayer and the many plaintiffs claiming their cancers were caused by roundup of wheat killer sold by Bayer unit Monsanto?
Yeah, if this settlement comes through, then it means a price tag possibly around the area of $10 billion. That's according to the reports. Bloomberg has had this story. And it means that about half of the outstanding, or more than half of the outstanding court cases still against Bayer of people who claimed their cancer was caused by Roundup, a weed killer, from the company Monsanto, which Bayer bought. And the report says that about 50 to 85,000 cases of the 125,000 cases still pending could be settled. And this as early as June. Of course, that's a huge relief for Bayer because with a settlement, it ends this thing sooner. And it allows itself to go on, and the price tag hefty, but not endangering the Bayer Group in any way. It can afford to do that over the next couple of years. Of course, the shareholders will feel it. They're not feeling it today. They're feeling relief that this is in store. The share is the leader in the DAX today. As we speak, it's going up by more than 8%, a leap for joy, and in a very sad case, one must add, though, in conclusion.
All right, Ulrich, thank you for updating us on those. Let's continue to keep a track on these market developments. The week has just started, so we'll continue to follow up. Thank you.
Yes.
And Asian markets traded mostly higher today as investor sentiment remained resilient despite growing concerns over the U.S.-China relationship. Australia's benchmark ASX 200 rose 2.16% to about 5,615 points, with all sectors finishing up. In Japan, the Nikkei 225 index added 1.73%, while the Topix index was up 1.65%. South Korea's Kospi rose 1.24%, while the Hang Seng Index in Hong Kong erased earlier losses to finish up 0.1%. Mainland Chinese shares traded mixed. The Shanghai Composite rose 0.15%, while the Shenzhen Composite was fractionally lower at 1,750 points. And in the U.S., stock futures rose today, reversing earlier losses after a decline in some major tech stocks. Dow Jones Industrial Average Futures implied an opening gain of 0.93%. S&P 500 and Nasdaq 100 futures also pointed to a positive open. The Dow fell just over 100 points on Friday, while the S&P 500 and Nasdaq dropped 0.8% and nearly 1%. Respectively. And oil prices eased today on concerns over rising tensions between the United States and China over Beijing's plans to impose security laws on Hong Kong and the possibility of sanctions from Washington. Oil prices have risen sharply in recent weeks as an easing of coronavirus restrictions has led to increased demand, but the tensions between the United States and China are beginning to weigh on sentiment. Brent was down 0.5% at $34.94 a barrel, while U.S. oil was down 0.2% at $33.19 a barrel. Both contracts have risen for the past 4 weeks, although prices are still down around 45% so far this year. And gold prices declined earlier today as Japanese equities rose on news of a potential stimulus program that boosted investors' risk appetite through fresh tensions over Hong Kong Limited, the metals 4. Spot gold was down 0.5% at $1,726.18 per ounce, while U.S. gold futures were down 0.5% to $1,726.60. Among other precious metals, palladium fell 0.1% to $1,944.06 per ounce. Platinum was down 1.5% at $827.12, and silver dropped 0.6% to $17.08. Away from the markets there, and here on the African continent, Tunisia's GDP shrank by 1.7% year-on-year in the first quarter of 2020 as the vital tourism sector has been hit hard by the coronavirus crisis. That compared with growth of 1.1% in the same quarter last year. Authorities in the North African country expect the economy to shrink by 4.3% this year, which will be its steepest contraction in more than 60 years. Tunisia started relaxing restrictions on movement and businesses this month, allowing half of government employees to return to work, but the pandemic is hammering its tourism sector, which contributes nearly 10% of gross domestic product and is a key source of foreign currency. And S&P Global Ratings is projecting South Africa's economy to shrink by 4.5% this year as a result of the COVID-19 pandemic that has impacted production and consumption. In April, S&P downgraded South Africa's credit rating further into non-investment grade territory, saying COVID-19 related pressures would have significant adverse implications for the country's already ailing economy and for tax revenues. It lowered its long-term foreign currency rating on South Africa to BB- from BB, and its long-term local currency rating to BB from BB- plus, with a stable outlook. The rating agency projects growth of 3.5% for 2021. S&P said the weaker macroeconomic environment would also weigh heavily on fiscal revenues, projecting that the fiscal deficit would widen to 13.3% of gross domestic product in 2020, the widest in the country's democratic history. S&P estimates net debt levels could rise to over 75% of GDP by the end of 2020. An early attempts to resolve a wage dispute between the South African government and public sector trade unions have failed, and the dispute will now move to arbitration. According to the bargaining chamber where such wage disputes are heard, the dispute has important economic implications as public sector salaries make up around a third of state expenditure. Arbitration hearing will start by mid-June when an arbitrator will issue an award. After the hearings are complete, with the matter potentially heading to court or resulting in a strike if the unions aren't happy. A public sector strike could cripple service delivery and harm efforts to contain the coronavirus. And the Central Bank of Eswatini has cut its main lending rate by 50 basis points to 5%, its latest reduction in recent months in response to the outbreak of coronavirus. The bank cited the impact of the pandemic on its growth prospects, with the economy expected to shrink by 6.16% in 2020 under a pessimistic scenario. Its rate decision have also aligned with those in neighboring South Africa, which also cut its main lending rate by 50 basis points on Thursday. Eswatini's local currency is pegged to the South African rand. All right, we'll take a quick break, and when we come back, we'll talk more about Nigeria's GDP as well as risks that abound as countries ease lockdown so soon. So stay with us. Nigeria's GDP grew by 1.87% year-on-year in the first quarter of 2020. Now, the performance recorded in first quarter 2020 represents a drop of 0.23% points compared to the first quarter of 2019 and 0.68% points compared to the fourth quarter of 2019. While analysts say this is in line with expectations as major contraction will only be recorded or seen from the second quarter of the year. Let's talk to the practice lead, Sub-Saharan Africa Market Research at Docker Frontier, William Artwell. Good afternoon, William. Thank you for joining us.
My pleasure.
Well, 1.87%, that's the Nigerian's GDP growth rate for the first quarter of the year. For you guys that monitor these markets, did you expect that growth rate for the country in the first quarter?
Well, it's not surprising for the first quarter. We know that there was a big increase, particularly in oil production. So there's a lot of additional activity happening compared, of course, to the same quarter last year. Of course, the numbers weren't so good on a quarter-by-quarter basis, but certainly compared to Q1 2019, there was an increase in economic activity. Now, as you pointed out in the introduction, that only takes into account some of the earliest measures to contain COVID-19 and only some of the earliest impacts of the global coronavirus pandemic and knock-on economic crisis. So certainly as we go into Q2, we'd expect economic activity to reduce quite considerably. And that's already starting to be displayed in some of the higher frequency data that's coming out already. So the PMIs, for instance, for April, showing actually private sector economic activity falling to its lowest rate on record in terms of PMI levels. So I think we're in for a much rockier Q2 and potentially a fairly weak Q3 as well, with the economy likely to be in recession for the year overall as a whole.
Now, looking at these data, you talked about the PMI that has continued to decline. Of course, we're seeing the growth rate slowing. How do you see the MPC responding to this difficult economic climate when they make their interest rate decision on Thursday?
So we're likely to see a bit of monetary policy easing over the course of the year. It's difficult to say if they'll make a cut on Thursday, but certainly by Q3, I would say we'll see a small trim to the interest rate. Of course, the MPC is needing to balance several forces at once. So one is, of course, the weak economy. So making life a bit easier for borrowers would certainly help to provide some cushion. But at the same time, inflation is running well into double digits. We know the currency is under a lot of pressure. So certainly there's also pressure not to ease rates too much. So we'd expect rates to go down very slightly, perhaps 25 basis point cut. But the timing is going to be certainly the tricky point here.
Now, some economic analysts here believe that the monetary policy has exhausted all its capacity to really help shore up the economy. Do you agree with that?
There's certainly a lot of truth in that. And I think as we look at what constitutes the economy, what are the largest proportions of the economy, of course, a lot of smaller businesses, the informal sector, for instance, who perhaps don't rely on formal credit from banks, they're going to be a bit less affected by minor changes in monetary policy. It's more the big disruptions caused by things like the coronavirus lockdowns that I know have been stricter in Lagos and Abuja than other parts of the country, but they'd be more affected by those kinds of regulatory changes made by government than by slight shifts in monetary policy. But certainly, I suppose the formal economy would benefit at least marginally from a bit of easing of interest rates.
Policymakers across the region are clearly concerned about the economic costs of lockdowns and are beginning to ease restrictions. What are the risks of easing too soon, and which economies do you expect to rebound the quickest?
So the risks, of course, the immediate public health risks are a sudden spike in infections. And we have seen in certain SSA markets where measures have been eased very quickly, and we've seen people back on the streets. We do see and would expect to see an increase in infections. And of course, that brings the risk of then rather ad hoc measures being reimposed from time to time and in an inconsistent way. And that could actually create even more uncertainty and disruption for business. In terms of markets which are better poised to recover, we know that a number of SSA markets facing real debt challenges. So those with particular fiscal pressures, risks of debt distress or even debt defaults in some cases, those markets would really struggle to recover more. So we know that Angola is in a fairly vulnerable position. We know Zambia is in a very vulnerable position as well. And with those fiscal pressures, the governments there are in a weaker position to provide additional stimulus to the economy and to assist households at the end of the day. So those kinds of markets we'd expect to struggle to return to normality, whereas other markets where there's additional fiscal spending going on, assistance to businesses, Kenya is a good example here, we'd expect actually economic performance to rebound quite healthily in 2021.
And what about Nigeria?
And Nigeria, of course, the big lion of the region. As we expect oil prices to rebound to some extent early next year, we would expect the economy to return to growth, but of course at fairly low levels. Nigeria, this isn't the first difficulty the economy's faced in the last few years. We know there was a lot of difficulty around 2016 and policy uncertainty from a number of quarters, certainly hampering some of that foreign investment that's so crucial. So we don't expect growth to rebound in a strong way, but we do expect the economy to emerge from recession next year. And that's when we'll start to see a little bit more investment, a little bit more job creation coming online. But certainly 2020, as it stands, is looking to be a fairly difficult year.
All right. Thank you very much for your time, William. William Artwell is a practice lead, Sub-Saharan Africa market research at Docker Frontier. Thank you for your time, William. And AngloGold Ashanti's Mompoeng mine in South Africa has been temporarily closed after 164 workers tested positive for the coronavirus. The mine, the deepest in the world, only reopened in April after being shut under a nationwide lockdown and had been operating at around 50% capacity. It accounted for around 7.4% of the company's total gold production in 2019. AngloGold Ashanti, which also operates mines elsewhere in Africa, South America, and Australia, said it had conducted 650 tests at Mompoeng since detecting the first case of the virus there last week, and 164 employees had tested positive, with only a handful of tests left to process. Like all South African mines, Mompoeng, which employed an average of 5,051 people, including contractors in 2019, was permitted to return to operating at 50% capacity in April when the lockdown, one of the world's most restrictive, was eased. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.